Stock market forecasts are just pouring in for 2026. What do experts expect the stock market to do next year? What do I expect it to do next year? And then what should you do with your portfolio? How do you position your portfolio for success in the upcoming new year? I've got that and more coming up. So I grew up a hockey player and played pretty competitively growing up, doing travel and all that sort of stuff pretty competitively. And then my high school, went to a really big high school just outside of Grand Rapids, Michigan, and hockey was our main sport. We had an ice rink right on our campus, so that's pretty unique, and it was an emphasis. And yeah, my senior year, we were very good. I remember talking to my coach during a pretty long win streak for us, and I'm like, hey, at some point, probably going to get tripped up and struggle with the team that we should beat. And he said, hey, Mike, what are the odds if you flip a coin 10 times and each of those 10 times it lands on a head? On the 11th flip, what are the odds that it lands on a head? And I said, probably not very good, right? And he said, no, 50-50. And his point was, listen, it's always 50-50 anytime you flip a coin. And so don't assume that we're going to get tripped up. Listen, I agree with that math. I disagree with it, because what are the odds of flipping a coin 11 times and having it be heads every time? That's pretty low. I use that as a backdrop because right now we're at the turn of the year, and of course everyone's playing the game. What do you project? What do you forecast the S&P 500 is going to do? And no one knows. No one knows. Okay, it is all guessing. Yes. The stock market is connected to earnings. And if you can forecast company earnings, then you can forecast where you think the market's going. It's just, that's not in a straight line. It's not linear. Things change all the time. It's a leaf in the hurricane in the short term. That's how the stock market moves. No one predicted COVID. I would say the stock market over the past few years has far surpassed expectations. No one knows. But I do pay attention. I do tune in, and the expectations this year are lofty. Take a look at this headline showing Oppenheimer, which is a company we're fairly familiar with. They manage money and they're investment banking, all that sort of stuff, and they have a very, very lofty expectation. We look at the S&P 500, so that's what this is showing. But if you look at even some of the other firms, I mean, the lowest of these, and yeah, this isn't an enormous, it's an all-encompassing list, but just even of these kind of major names, the lowest expectation for stock market performance in 2026 is only 4%. The average is double digits, 11% or so is what Wall Street firms are expecting. That's not what I'm expecting. And I'm not saying that to caution you, but I'll share what I would brace myself for and how I would encourage you to position your portfolio. So go on a journey with me. This is how I thought through it. Honestly, this is truly my thought process. One, what is the long-term average of the stock market? The long-term average going back 75 years, 100 years almost, is about 10% a year. The S&P 500 does about 10% a year. Of course, the S&P 500 wasn't around exactly 100 years ago, so kind of mixing and so on. Just call it 10%. And you can look at different time frames and see closer to 9. You can see more recent and 12, 13. Call it on average 10%. That's the long-term average. So if you were to really, really press me, what do you think the stock market's going to do? 10%, because that's the long-term average. So that's where I would start. But then I look more short term, okay? Take a look at this. And the far right column is year to date, but that's as of the end of the most, recent month. And yeah, the market's, the month isn't quite there yet. But at the time, end of November, this was saying stock market was up 17.8%. 2024, the stock market was up 25%. 2023, the stock market was up 26%. Yes, in 22, it was down 18%. But then in 21, it was up 28.7%. In 2020, it was up 18%. In 2019, it was up 31%. So guys, if the long-term 100-year average of the stock market performance is 10%, we have been way above that recently. Way above that in the past 3 years. Way above that in the past 6 years. Okay? So, no one can see around the corner. Without being able to see around the corner or do any fancy math or analysis, those two things, long-term average is 10, our short-term average is well above 10. my expectations for the stock market in 2026 are below average. Okay. And that is not because I'm doom and gloom, and it's not because I know something that someone else doesn't. It's just looking at averages. Okay. I would say, yeah, my expectations are a little bit more tempered. Now, what are the circumstances right now that could mean, no, it's actually going to do great? I think AI, right? We're not fully seeing how that has impacted profit margins and earnings. And I think that a lot is flavoring these lofty Wall Street expectations. And I do think that, there's a lot of expansion, a lot of opportunity and things happening within businesses. Businesses are optimistic. And yet at the same time, there's things there's headwinds as well and challenges that we need to overcome, and, geopolitical stuff and other challenges. And yes, the dark side of AI, right? So to me, just looking at long-term average and then what's happened in the short term, my expectations is, I'd wear a seatbelt and suspenders for this upcoming year. I hope I'm wrong, and I hope the Wall Street firms that have lofty expectations are right. I'm just expecting a little below, I'm expecting below average returns for the upcoming year. So what does that mean? What does that mean for you? Does that mean, based on these lofty predictions by Wall Street or my more tempered expectations, does that mean you need to make some big changes? I'd say no. Based on either one of those, whether you're aligning more with Wall Street firms, maybe you hopefully have your own opinions as well. Should that mean, I've got to make some big moves? No. When you look at your portfolio, and right now, at the beginning of the year, this is a typical time where you should tune in to your investments. And here's what you do. You first tune into your plan. What are your financial goals, and what do your investments need to do to help you reach those goals? And I get it. If my investments could average, 20% a year forever, I'd reach my goals a lot sooner. No. But how much risk do you need to be taking to achieve your goals? That's the first thing. Second, tune into your own risk tolerance. For many of us, those are going to be right in sync. That's going to work, right? To achieve my goals, I need a certain level of risk. I'm comfortable taking that risk. Fantastic. For others, it might say, no, that makes me a little squeamish, actually. If we see a 15% drop in the market, I get scared and I tend to make adjustments to my portfolio. I'm not going to want to do that right now, blah, blah, blah. So tune into your risk tolerance. Number 3, you then tune into your strategies, right? And if you're a fan of the Wise Money Show, just diversification. Yep. Your investment philosophy, your strategies need to be anchored in diversification. Can't have all your eggs in one basket. But when the market goes risk off, all those baskets do tend to move in the same direction at the same time. When you need it the most, diversification tends to not always show up. Therefore, do you have multiple strategies that can help you with that? I've done a lot of videos on that, and I would make sure that your investment strategies, you tune into those and make sure that you've got true diversification and complements there. And then fourth, last thing, once you check all the, I know where I stand with my goals and what my investments need to do to help get me there. I've got the right risk tolerance. I like my strategies. You rebalance. And that's what you do in the face of, the stock market should do great, or the stock market might have an underperforming year. In either of those situations, those are your 4 steps. So no matter what the market brings in the year ahead, I want you to have confidence that you can take great strides in your financial life in the face of that, and even during the seasons, because it's inevitable, whether it will just be for a pocket or for a long stretch of time, in the volatile seasons upcoming, that you're doing the right things to achieve your goals and to invest prudently to achieve that lasting long-term success. Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.